Good afternoon, everyone. I am back. Something is wrong. I'm live, but all right. I think I'm live now. Yes, perfect. So, friends, let's go to the next concept now. Okay, we'll write down the next concept as cancellation of forward contract. Everyone, write down the next concept heading: cancellation of forward contract. All right. We'll take the same person who was taking a lot of tension, Kamala. All right. Now tell me, what has Kamala sold to Michelle Obama? Lipstick. What is the price of the lipstick? 1 lakh dollar. Let us assume today is January 1st, 2020. Okay. Today is January 1st, 2020, and Kamala has sold lipstick worth 1 lakh dollar to Michelle Obama. Michelle Obama told that she will make the payment on March 1, 2020. Not March 1, March 31st, 2020. So Kamala entered into a forward contract. She sold 1 lakh dollar. How many months forward did she sell it? 3 months forward. Why? Because she's supposed to get the money only on March 31st. Now, in the evening at 5 p.m., same day, Jan 1, 2020, Michelle Obama will call back and she told that the quality of this lipstick is very, very bad. I will not make the payment to you. Go do whatever you want. Now, tell me, friends, what will Kamala do? Kamala will get emotional. That's a different point. I'm not discussing on that. What I'm trying to say here is that she has already entered into a forward contract where she is selling 1 lakh dollar 3 months forward. She has to cancel this forward contract now itself because she got to know that anyways Michelle Obama is not going to pay. So for canceling this, the action that she will take today will be she will buy 1 lakh dollar 3 months forward. So in effect, what will happen is that today morning she sold 1 lakh dollar 3 months forward, and evening she's bought 1 lakh dollar 3 months forward. Both will go to 31st March and it will get cancelled off. I hope you're clear with the first part of the logic. Now suppose Michelle Obama does not call on January 1st. Michelle Obama is calling on January 31, 2020. If she is calling on January 31, 2020, in that case, in order to cancel the contract, what she will have to do is she will have to buy 1 lakh dollar 2 months forward, because 2 months forward will reach where it will reach 31st March. If the call was coming on Feb 28, 2020, in that case, the way to cancel it will be buy 1 lakh dollar 1 month forward. And suppose Michelle Obama is calling on March 31st for cancelling the contract, then Kamala will have to buy 1 lakh dollar spot in the forward market, which means she will cancel at the spot rate, but the cancellation will happen in the forward market. I told you there are two markets. One is derivative bank, that is a forward market, and SBI, which is a real market. If the original transaction is with derivative bank, cancellation should also happen with the derivative bank only. Can you draw this picture in your books now? Alright, Deepika, let everyone finish it. Then I will draw the next chart. Alright, friends. So if you are done with this concept, now I will write down the next concept heading, which is called as extension of forward contract. Chitra, you're not able to read the Word document. That looks to be a problem. Others, are you facing the same issue, or it's only an issue faced by Chitra? And why Word document? You must have got the PDF file. I have shared PDF. Let everyone revert. In the meanwhile, I'll just draw this picture also, and then I'll get back to your issue, Chitra. Okay. Now, just like I drew earlier, let us say today is Jan 1st, 2020. Okay. Today, Kamala has sold $1 lakh. How many months forward? 3 months forward. Suppose now today evening, Michelle Obama is giving a call and telling that, look, I won't be making the payment on March 31st. Instead, I will make the payment on April 30th. In that case, what we will have to do will be as follows. First, we have to cancel the original contract. So what she will do, she will buy $1 3 months forward, and then she will have to sell $1 4 months forward. Only when she does this, the whole contract will get cancelled. Suppose the call is happening on Jan 31, 2020. Then the two steps will be, first it will be buy, how many months forward now? 2 months forward. But sell will happen how many months forward now? 3 months forward. Suppose the call is happening on February 28th. Then first what you will do, buy 1 month forward, sell 2 months forward. If the call is happening on March, it will be buy its spot in the forward market and sell 1 month forward. Can you please write down till here in your books now? But Chitra, my understanding is that everything was converted into PDF. I don't know how Word has come in between. Are you saying that some of the documents, instead of converting into PDF, they have kept it as Word? I didn't check that. That was done by my office people. If that is the case, I will get back to you very, very soon. Okay? Alright, friends. Have you all put up till here in your books? In that case, we'll go to the next concept. The next one would be execution of forward contract. So we learned cancellation, we learned extension. Now we are going to learn what? Execution of forward contract. Alright. What is today's date? January 1, 2020. March 31, 2020. Okay. So today what has Kamala done? Sell $1 lakh. How many months forward? 3 months forward. Today evening, Ramni, I'll get back to you. Today evening, Michelle Obama doesn't call. She doesn't call on January 31st. She doesn't call on February. She finally calls on 31st March and tells that, look, I'm making the payment. Thank you so much for the credit period. Now, in order to cancel this contract, what she will do is she will buy $1 spot in which market? In forward market. Or I told you this will be happening in which bank? Derivative bank. After this, she will get real $1 lakh from Michelle Obama. She will sell that $1 lakh spot. Now she will sell in which market? She will sell in the real market, that is State Bank of India. Or friends, this is nothing but the three steps that I told you earlier. Sell forward. What is this then? This is buy forward. And the last part is what? The last part is sell spot. These were the three steps we learned before the break. Can you please write down this also in your books? Arjun. അർജുൻ നീ എല്ലാം പി ഡി എഫ് ആക്കിയിട്ടല്ലേ ഷെയർ ആക്കിയിരിക്കുന്നത്?
എല്ലാം പി ഡി എഫ് ആക്കിയിട്ടാണ്.
അവർക്ക് കുറച്ച് വേർഡ് ഡോക്യുമെന്റ്സ് ഉണ്ടെന്ന് പറയുന്നു, കുറച്ച് ചാപ്റ്റേഴ്സ് ലൈക്ക് ബോണ്ട് വാല്യൂഷൻ എക്സെട്ര വേർഡ് ആയിട്ടാണ് വന്നതെന്ന് പറയുന്നത്.
ഇല്ലല്ലോ,
ഒന്ന് ചെക്ക് ചെയ്യുമോ? ഒന്ന് ഫുള്ളായിട്ട് ചെക്ക് ചെയ്ത് എനിക്കൊന്ന് കൺഫേം ചെയ്ത് പറയണേ.
ആ
ശരി. Alright friends, I hope you have put up till here in your books now. Okay. So friends, we are done with that. Shall we do a question on this one now? Everyone take this question, read through this question and understand this question, after which we will do it together. Ramani, there can be a profit or there can be a loss. That is something what we already learned earlier. So I don't want to put that here and create confusion. So I kept it blank as such. Please read through this question. It's a very good question on extension of forward contract. All right, shall we write down the basic data together now? Okay. Working note 1, basic data. Okay. An importer requested his bank to extend the forward contract for $20,000, which is due for maturity on 31/10 for a further period of 3 months. Point number 1. This guy is an importer. Alright. So this guy being an importer, he will be having a payable or will he have a receivable? He will be having a payable. So the amount payable by the importer, that turns out to be $20,000. Okay. Then they have told we need a further extension of how much more? Further extension of how many months have they told over there? 3 months. Then they have given details in table. Let's not copy down the contract rate, spot rate, etc. Can you please write down till here in your books first? Vandanin, I am born and brought up in Kerala and I am a North Indian. My mother tongue is Sindhi, but I am born and brought up in Kerala, so I know the North Indian languages also and I know Malayalam also. Alright friends, have you put up till here in your books? Okay, now let's go and read the next part of the question. In the table, they have given the spot rate, they have given the 3 months premium, they have given the margin for buying and selling. Friends, margin for buying and selling means commission, that you just understand for your purpose. Margin means commission of the bank. Okay, margin means commission of the bank. All right. Now, I'll write down working note number 2. Basically, we have the spot rate and we have the commission of the bank. So I can find out what is going to be my spot rate after considering the commission. So I will write down spot rate after considering banker's margin. Alright, particulars. bid, ask. Spot rate, that is 41.5, 41.52. They have given the margin. Friends, you have to understand the margin is nothing but banker's commission. So this is actually income for the banker. Alright. So if that is the case, just think and tell me, bid rate is what? Bank buying rate of commodity. So when the bank is buying, will the bank add the commission and give me back money, or will the bank deduct commission and give me money? The bank will deduct. Ask is selling rate. So bank will add commission. Alright. So the spot rate after considering the margin will be 41.5 minus 0.075 percentage, that is 41.46 will come over here. 41.5 to plus 0.2 percentage will be 41.60. Can you write down till here in your books now? Shubham, I have checked with my team. I'll get back to you on the Word files. We will make sure that you will get the proper PDF file also. Alright friends, have you all put up till here in your books? Now, okay Deepika, you want to see the previous page? You mean this one? Please go through this. Alright. Working note 2 is also done. Now I will go to working note number 3. Just like I found out the spot rate, can I also find out the forward rates after considering margin now? Particulars, bid, ask. Alright, first I will write down the spot rate. What is the spot rate told over here? Is it 41.5 and is it 41.52? Have they given the 3 months premium over there? How much is that? 0.87 percentage, 0.93 percentage. So can I get the 3 months forward without considering margin for time being? That will be 41.86, 41.90. Now I will write down margin minus 0.075 percentage plus 0.20 percentage. So from this I'll find out the 3 months forward after considering what? After considering margin. That will be 41.86 plus 0.075%. Sorry, it will be minus 41.82, and the second one will be 41.99. Can you please write down till here also in your books, friends? Alright friends, I hope you have put up till here in your books now. Fine. Now we got the rate. Now let's read the first requirement. Now he wants to extend the contract. So I will write down the next working note heading. Cost of extension. Alright. So here I'll draw a chart. What is the spot date that is told over here? 30/10/2010. Let us say this is 3 months back. That was the original contract date. Now they want to do it after 3 months. So I'm putting it as 3 months forward over here. Alright. So 3 months back, being an importer, he must have bought how many dollars? $20,000 at a contracted rate of how much? 42.32. Friends, contracted rate means the rate after considering commission also. Okay. So this 42.32 includes commission. You can write that down if you want. Now on this day, to cancel this contract, what will he have to do? He will have to sell $20,000 spot, and then he will have to again buy $20,000 3 months forward. Only then the extension will happen. Can you draw this chart in your books now? Alright friends, have you all put up till here in your books now? Okay. If you are done with this part, now we will solve it properly. I will write down over here point number A, current position. I'll give a heading like this, particulars, computation, result. Alright. First line, draw a line over here also. Okay, fine. Now, what was the current position that we were having? Buy $20,000 at 42.32, which turns out to be 8,46,400. Point number B will now be action to cancel. Sell $20,000 at spot. So once I'm selling, the bank is buying, bid rate is applicable. Spot bid rate. Spot bid rate will be 41.46. Okay, so what is 20,000 into 41.46? 8,29,200. Due to this, I will be making a loss. A minus B. My loss will be 17,200. Alright. Then what am I going to do? I'm going to action to extend. What I have to do is I will be buying $20,000 at. Now I'll be buying, so it is going to be the ask rate, forward ask rate, that is 41.99. 20,000 into 41.99 will be 8,39,800. All right. So I'll write down the last point, total cost. What will be my total cost now? This plus 7,200, that is turning out to be 8,57,000. Can you please write down till here in your books, friends? Once you're done, please write and let me know that you're done. Alright, fine friends, so if you're, many are still doing, let them all finish. Gauri, it's 41.99. I'm buying dollar, bank is selling dollar, dollar being the commodity, ask rate will be relevant. Okay, fine friends. So we are done with this part of the question. Shall we now go to the next question? The rate of the new forward contract. Write down the next working note heading. Rate of the new forward contract. Friends, we already got the rate of the new forward contract. We got the answer as 41.99. Can you write down this also and finish it off? Alright friends, so we are done with this question also. Shall we now go to the next concept? Everyone write down the next concept heading, futures. Now friends, we learned the concept of forward. Okay. What was the definition of forward? A contract entered today for a future date. Am I right? Same like that, you can also have something called as futures, which is also the same thing, which is a contract entered today for a future date. The definition is exactly the same, but there are two differences for a future when you compare it with a forward. The first difference is that there is something called as a margin deposit. You can't just simply trade in futures, you need to put a deposit so that tomorrow if you run away, they will catch away your money. Alright? First one is margin deposit. And the second one, what is the main difference is that they are dealt in lots, or the lots is what we call it as contract size. Friends, if you have installed this app called IIFL, I will show you after some time. Keep that app installed. I will show you how futures are traded in the app by showing you what is the virtual portfolio. So you will also get a grip on what you are doing it. I might not be able to show you because the app is in my phone. I don't use a desktop version of that. So I'm not much familiar with whether virtual portfolio comes on the desktop version also. But in the app, the virtual portfolio is there. So I'll just announce and dictate. You listen to that, what I'm trying to say. Okay? Fine. Have you put up till here in your books? Alright friends, now I'll tell you these differences one by one. Difference number one is margin deposit. Okay? We'll take the same example. Kamala has sold lipstick to Michelle Obama for a value of $1 lakh into 50 rupees. So how much money Kamala is supposed to receive today? 50 lakh rupees. Am I right? Now this is a huge transaction, 50 lakh. Tomorrow, if suppose the actual rate changes and Kamala decides that why to simply go to the futures, I'll run away. To avoid such kind of things, what they say is that at least 25% of this has to be a margin deposit. That turns out to be how much? 12 lakh 50,000. This money has to be kept as a deposit in Kamala's demat account. And on this she will not get any interest. Had she put this money in her own bank, she would have got at least, let us say 10%. She would have got 1,25,000. Now she will not get this. This is what we call it as opportunity cost due to margin. Can you please draw this picture in your books? This 12 lakh 50,000 is what we call it as margin deposit. Please write down. Alright friends, have you all put up till here in your books? The next logic that I need to explain to you is the logic of contract size. Okay. So Kamala has sold lipstick to Michelle for a value of, let us say, $1 lakh. Okay. Now earlier she was entering into selling a forward contract at $1 lakh at what? 50 rupees per dollar. That's what she did earlier. Now she has to deal in lots. Let us say $1,000 is the contract size. Okay. Let us say $1,000 is the contract size. Then she has to enter into 100 contracts. Only then she will be able to do a full hedging of herself. Or why 100 contracts is because they say that I will not deal in small lots. $50, $100, people go to them, they will throw them away. No, minimum lot size 1,000. If you can do it, do it, otherwise get lost. This is the logic of contract size. Can you write down this in your books now? Badri 25 margin is actually an example. See why is this an example is because there are different apps these days. Zerodha is there, IIFL is there, Money Control is there. Every app when they trade, every app will have some different terms. SEBI has put a minimum guidelines based on which you are supposed to do it. Geojit will have something else. So once you really put your money, you will come to know exactly what is going to be your margin deposit. But the trading wherever I have done, it was 25%. And this keeps on changing this margin. It's not kept common. And in your institute material, they also have a formula for that. It is called mu plus 3 standard deviation. Alright, friends, contract size can be explained in one more style. If I say $1,000, it is actually, imagine this as a box. Okay. Inside this box, this is, let us say, $1. Like that, there will be lot of dollars inside. This whole thing together will turn out to be $1,000, and this is what we call it as contract size. Okay. So ideally, there is a formula for contract size. Formula goes like this: value of 1 unit. Here the value of 1 unit is what? $1. Multiple. We are having how many multiple over here? 1,000. Therefore, contract size will be $1,000. Can you write down this also in your books now? Yes, Ramani, this is what lot size means. I just showed you now with the help of a box. Yes, Deepika, the margin has to be maintained. For example, the moment you make a loss, that loss is a real loss. They will take away the money, and then there is something called as a maintenance margin. They will block it. Now, let's say your margin is, let's say, 1 lakh. It has come down to 90,000. If the maintenance margin is 90,000, the moment it touches 90,000, it will block, and then we will have to do a recharge of the same thing. There is, in fact, a concept called as initial margin, maintenance margin in my website. I don't think I'll be covering that here. Just go through that concept in the chapter of futures. All right. Alright friends, if you have put up till here in your books, now we can do a problem on futures. Everyone take this question now. By now you have understood what is basic data. I'll give you 5 minutes. Can you write down the basic data on your own, friends? Write down the basic data on your own, understand the question on your own, after which I will help you to solve this problem in the methodology. Friends, 1 minute. I forgot to mention one more point. We learned that in case of forward receivable, we had 3 steps. What were the 3 steps in case of forward receivable? Sell forward, buy forward, and then what? Sell spot. In case of future receivable, we will be having 3 steps, which are not 3, 4 steps. Step number 1 will be number of contracts, because we are dealing in contracts and lot. Okay. Step number 2 will be sell future, buy future, and step number 4 will be sell spot. Can you please write down this in your books now? Yes, Ramani, margin actually differs based on many things. Volatility. Market is heavily volatile, margin differs. Market is not very volatile, the margin comes down. Just take IIFL app, there is futures. You click on that, you will see lots, everything, you will understand things better. I'll also show you after some time. Let me complete my portions first. Alright friends, if you have put up till here, I'll give you 5 minutes time. Can you try solving this problem on your own? You might not get the answer, but once you use your brain, then when I explain, things will be much easier. I'll give you 5 minutes time. Please try doing it on your own. Just scribble and try solving. You might not get, then I will do it. Alright friends, shall we start solving it together now? Okay. So here they have given that the receivable amount is $4 lakh after how many months? 3 months. Contract size is said to be how much? 1000. They have given the spot rate, which is 44. They have given the futures rate as 45, and after 3 months for cancellation rate, the spot and future is given. Friends, I'll write down the basic data so that you get clarity on what we are doing. Okay, so here dollars receivable is equal to 4 lakh dollar. Point number B, what is the duration that is mentioned over here? The duration will be 3 months. All right, then they have told the contract size is turning out to be $1,000. Then they have given some rates. I call it as S0. S0 means spot price today. All right. Then we have a rate called F0, that is 45. This is future rate entered today for a future date. That is the logic of F0. Then we have S1, that is 44.5. This is spot after how many months? After 3 months. Then I have F1. F1 is basically the rate which is for cancellation, and that will always be the same as a spot rate. So this is the cancellation rate similar to spot rate. Can you please write down this in your books now? Aditi, brilliant, your answer is right. Good job, keep it up. Alright friends, have you all put up till here in your books now? Okay, if you have put up till here, now we will go and find out the 4 steps. Working note number 2, amount receivable under futures. So friends, here we will go by the 4 steps. Step number 1 will be what? Number of contracts. Okay, number of contracts will be $4 lakh divided by $1,000. So we'll get the answer as 400 contracts. Friends, this question, receivable also dollar, contract size also dollar. The question is easy. Next question, receivable is in dollar but contract size is in rupees. That question will make your life miserable. Okay, have you got the answer as 400 contracts over here? Step number 2 will be what now? Sell future. Friends, once you find the number of contracts, don't use it anywhere. It will create lot of confusion. Just find out so that the valuer knows you know how to find the contract. Here the steps will be $4 lakh into F0. How much is F0? I think that's 45. Do I get the answer as 180 lakhs? Step number 3 will be what now? Buy future. This is a cancellation rate. What is the cancellation rate that I am having over here? 44.5. So what is 4 lakh into 44.5? Does that turn out to be 178 lakhs? Now tell me, are you making a gain or are you making a loss? Okay, it is going to be a gain. I will make a gain of how many lakhs over here? 2 lakhs. Then I'll go to the final step. Step number 5, sell spot. Okay, what will you do in sell spot now? 4 lakh into 44.5, that is the spot rate. You get the same 178 lakhs. So your closing inflow will turn out to be how much? 180 lakhs. Can you write down till here in your books now? Yes, Ashwini, Shubham, your answer is right. All right, friends. I hope you have all put up till here in your books now. Okay. I think many are still writing. Let them finish. Okay. All right. So can I go to the next question now? We are done with this question. The next question is a beautiful question. I'll give you a minute's time. Read through this question, understand the question, after which we will do it together. All right, friends. Now let's do one thing. Let us write down the basic data together. Working note 1, basic data. All right. Point number A, dollars receivable. Everyone tell me how much is the dollars receivable? 1 lakh dollar. Then they have told spot rate is given, that is S0, 0.02140 dollar bar rupee. My dear friends, do you feel comfortable when you see dollar bar rupee? If you feel uncomfortable, just imagine it is 0.02140 dollar per masala dosa. All right. Okay. After this, they have given the 1 month forward and 3 months forward. I am going to receive this money only after 3 months. So I will write down the 3 months forward rate. How much is the 3 months forward rate? 0.02127 dollar bar rupee. All right. Once that is clear, then they have given the contract size. How much is the contract size? 4,72,000 rupees. Friends, here the dollar receivable is how much? 1 lakh dollar, whereas the contract size is 4,72,000 rupees. This will make your life miserable. Now down they have told futures are available for June, for September also. We are worried only about September. This is future entered today for September. That will be 0.02118 dollar bar rupee. Similarly, the margin also will be relevant only for September. That is equal to 15,000 at 8%. All right. Then they have given down the spot rate, that is S1, 0.02133 dollar bar rupee. They have also given F1, that is 0.02134 dollar bar rupee. Friends, S1 and F1 are almost the same. 0.001% only is the difference. That is absolutely acceptable. Please write down till here in your books, friends. No, Rankesh Badri, you don't do that. That's where you make all the confusion. What is the commodity over here? It is rupee. Am I right? It's a dollar receivable also. We will go by the same 3 steps: sell dollar, buy dollar, sell spot. Sorry, sell future, buy future, sell spot. Will not create any other confusions over there. All right. You're telling that because it's indirect code, you want to convert into direct code. Never do that in the exam. That will consume a lot of time and you might go wrong also. Fine, friends. Once you have put up, now shall we do it one by one? The next working note heading will be number of contracts. That is the first thing that we have to find out. Point number A, dollar receivable. How much is the dollar receivable over here? 1 lakh dollar. What is the F0 rate that is mentioned in the question? 0.02118 dollar bar rupee. So I will get the rupee receivable as 47,21,435. Okay. The contract size is how much? 4,72,000. Therefore, the number of contracts will be 10.00304. Can you please write down till here in your books now? Alright friends, once you have put up till here, now I will show you how this will affect. 10.0034 is the number that we got. But friends, can we enter into this many number of contracts? I can only enter into 10 contracts in futures. The balance 0.00304, I can't enter in futures. So I will either go for no hedge or I will go for forward. Okay, this question we will solve it using no hedge. There's another question which we will solve it using forward later on. Everybody clear so far? Okay, next part. Okay, this is part none. Similarly, the total amount receivable is how much? 47 lakh 21 435. Now I won't be getting this much of money for sure. I can only enter in the ratio of 10 is to 0.00304. If you do this, here you will get the answer as 47 lakh 20,000 and here you will get the answer as 1435. So 47 lakh 20 is the money that I will receive in futures. 1435 I will get it by way of no hedging. So I will not get this money in future. Similarly, 1 lakh dollar is the total amount. Okay. In the same ratio of 10 is to 0.00304 if you do, I will get 99,969.6 dollar over here. This will go in futures. Here I will get 30.4 dollars. This will go under no hedge. Can you draw these charts in your books now? Alright friends, have you all put up till here in your books now? Okay. Alright. Now, are you still writing? Please interact and let me know. All right, friends. I hope you have all put up till here in your books now. Okay. Now, once you're done with step number one, then I will go to step number two, that is sell future. So here now I will sell only 99,969.6 dollar divided by 0.02118 dollar bar rupee. Once you do this, you will get the answer as 47 lakh 20,000. Friends, this is nothing but the same amount that you got over here also. Ideally, it should be the same. Then I will go to step number three. In order to cancel this, what will I have to do? I will have to buy future. So that will be 99,969.6 divided by F1. How much was F1? 0.02134. 134 dollar bar rupee. So we'll get the answer as 46 lakh 84,611. Then I will go to step number 4. Am I making a gain or a loss here? I am making a gain. 47 lakh 20,000 minus 46 lakh 84,611. I'll get the gain as 35,388. Once we do this, I'll go to step number 5. That is, I will sell spot. Alright. So when I'm selling spot, will I sell 99,000 or will I sell 1 lakh? In real market, I will sell 1 lakh. That is nothing but this plus 30.4 divided by 0.02133. Here also 0.02133. So I'll get the answer as 46 lakh 86,807 plus 1425. I'll get the answer as 46 lakh 88,232. Okay, this is going to be the final answer here. Friends, I'll finish off, then I'll give you time to write down the remaining. So after step 5, I will go to step 6, that is total inflow. That is nothing but the gain and this fund. So here it will be 35,388 plus 46,88,232. 47 lakh 23,620. Friends, the steps are not over. Now we will have opportunity cost on margin deposit. On margin deposit. Friends, they have told it is 15,000 per contract into 10 contracts we entered into. For 8%, 3 months interest I will lose. So 15,000 into 10 into 8% into 3 by 12 will give you the answer as 3,000. So finally I will go to step number 8 now. Total inflow. Okay. So here I'll get the answer as 47 lakh 20,620. Can you write down in your books now? Today's sessions are very heavy, friends. You'll have to sit and do some revision in the evening to get a grip on this. Once you're all done, please let me know. I will go a bit slowly. You must be exhausted. Even I am exhausted now. All right. Now please write down this also in your books. All right. Please write down this also in your books. All right, friends, I hope you are done with this also now. Once you're done, please let me know that you are done. All right, friends. If you're done with this, let us now go and complete. There are some more things to be done. Friends, this was only futures. Next working note will be, they're asking for amount under forward and no hedging also. Am I right? Let's do under forward now. Under forward, it will be $1 lakh divided by, what was the forward rate? 0.02127 dollar bar rupee. That will give us the answer as 47 lakh 1,457, and the final working note will be amount received under no hedge. So when you speak about no hedging, it will be $1 lakh divided by 0.02133. You get the answer as 46 lakh 88,232. Can you please write down till here in your books now, friends? Alright, friends, I hope you're all done with this now. Okay. If you're done with this, we are done with this question also. Okay, let's go to the next concept now. What is the next one? Money market hedging. Everyone write down the next concept heading in your books. Money market hedge. Yes, Ramani, you're right. Hedging with futures is more profitable. If after so much of hard work, if future was not profitable, I'll find that guy and I'll punch him on the face. Anyways, good if it's profitable with futures only. Alright, now let's do money market hedging. Friends, I will take the same person. Kamala is the one who takes a lot of tension. She has sold lipstick to Michelle Obama and she has to get how much money now? 1 lakh dollar. This 1 lakh dollar is what we call it as a receivable. A receivable is nothing but an asset. In money market hedging, what we do is we take the opposite or we create a payable. And we create a payable by putting a liability. Can you please put up till here in your books? Then I'll take a fresh page and show you how it can be done. Alright friends, I hope you have put up till here in your books now. So I'll go to the fresh page now and I'll show you how she will do a money market hedging by entering into a liability. Now where is Kamala right now? She is in India and Michelle Obama is where she is in USA. Alright. So what Kamala will do is she has to receive 1 lakh dollar from Michelle after 1 year. So what she will do is she will borrow some money which I'll call it as X. For timing, I'm assuming it is 10% interest in US, 10% interest in India. Okay. So this amount along with 10% should increase to 1 lakh dollar. Alright. So that will be nothing but 90,909. This much money she will borrow in US. She will bring this money to India, assuming that the flight costs are zero, and she will convert at the spot rate. Let us say the spot rate is 50 rupees. She will get 45,45,454. This money she will now invest in India at 10%. 45454 at 10% will increase to how much now? 50 lakh. So this is the money what Kamala will get at the end of year 1. At the end of year 1, this 90,000 with interest will turn out to be 1 lakh dollar. And then what Kamala will do is she will give a call to Michelle and tell her, look, you have to pay me money. Don't give me that money. Give that money directly to the US bank. And this money will be paid by Michelle. By doing so, Michelle is happy because she got 1 year credit period. Bank is happy because bank got interest. And Kamala is happy because she got the exact 50 lakh what she was supposed to get earlier. This is what we call it as money market hedging using receivable. So you can give a heading. Hedge using receivable. Can you write down till here in your books now? Alright friends, have you all put up till here in your books? Now I will show you what is hedge with payable. Hedge with payable. Alright. Now same way, in this example let us assume that Kamala has not sold lipstick. Kamala has bought lipstick. So Kamala has a payable. Friends, if Kamala has a payable, that is a liability, she will create an asset. How will she create an asset? By depositing in dollar. So I'll draw a table now. Kamala is where right now? She is in India, US. So now Kamala has a payable. Hence she will create an asset. How will she create an asset? She will go all the way to USA and she will deposit some money which along with 10% will turn out to be 1 lakh dollar. Hence the money to be deposited today will be how much, everyone tell me? $90,909. But friends, one simple common sense question. If Kamala had money, will she take this money, fly all the way to USA, go and show to Michelle Obama, Michelle, see, money is here, and then put it in the bank? No, Kamala doesn't have money with her. What she will do is actually, she will first find out how much to deposit. So this is nothing but how much to deposit. After taking this, what Kamala will do is she will come to India and she will borrow some money in India which will get converted into 90,909. So she will do 90,909 into 50. How much is 90,909 into 50? That will be 45 lakh 45,450. This she will borrow in India at how much percentage? 10 percentage. So this will increase to how much at the end of 1 year? 50 lakh. This money will be paid by whom? This will be paid by Kamala. In return, what about in case of US? That money along with interest will become $1 lakh. This will be withdrawn by whom? Kamala, and it will be given to whom? It will be given to Michelle. Can you please write down till here in your books, friends? If I am going fast, please let me know that I am going fast. Okay. Ramani, in this case, profit or loss, we are not worried because the purpose of hedging is so that Kamala can sleep peacefully. Alright? So they might make profit. You can always think that if I had not done this, I would have done forward, I would have made some money. That will never give you peace. The objective is to sleep peacefully, and that's what they have done right now. Okay? Alright, friends. Let's just do one question and back up with today's session. Everybody is exhausted now. We had too much of calculations today. Okay. Everyone now take this question. Do this question. Just read through this question. After which we'll solve it together and back up with today's session. Alright. Alright friends, shall we do it together now? First, I will solve it using the picture method, and after that what we will do is I'll give you the in step format also. Here, I am in UK. They are saying you are in UK, so I'll just draw a picture like this. UK, and my receivable is turning out to be how much? $3,50,000. Am I right? Okay. They have given a credit period of 3 months, and now they have given the following information. So if I have a receivable, what will I go and do in US? I'll create a payable. How will I create a payable? I will borrow some money which along with interest rate in US. What is the borrowing rate in USA? Is it 9%? 9 is for 1 year. So it will be only 2.25% for 3 months. Should end up helping me to get $3,50,000. So if I do a backward working, I should borrow $3,42,298 now. This money I will bring it to UK and I will convert. Okay. How will I convert now? $3,42,298 is what I'm having. I'll give this dollar to the bank, and in return, what will the bank give me? Sterling. Sterling being the commodity, bank is selling sterling, ask rate is relevant. What is the spot ask rate mentioned over here? 1.5905. 1.5905. So I'll get the answer as 2,15,214 sterling. This I will invest in UK at the deposit rate in UK, that is 5 into 3 by 12. It will be 1.25 percentage. So I'll get the answer as 2,15,214 plus 1.25 percentage, that is 2,17,904 sterling. Okay. So this money will be received by me, and this money, once it goes up, it will be paid by my customer. Can you please put this chart in your books now? Alright friends, have you all put up till here in your books now? I think you're still writing, let them finish. Alright friends, you have put up till here. Now I'll give you in a neat format exam. You can't write like this. You can write point number A. Since we have a receivable, we will create a payable. We will create a payable by borrowing in dollar. Point number B, dollar to be borrowed will be $3,50,000 divided by 1.0225, that is equal to 3,42,298. Okay. Step number 3 will be $342,298 will be converted into 215,214 sterling at the spot ask rate. Point number D, amount received by me will be 215,214 sterling plus 1.25 percentage, which is equal to 217,904. Okay. And the last point would be amount paid by customer will be $350,000. Can you write down this and finish it off, friends? Let's pack up a bit early today. You're all exhausted. I don't want to simply overload your brain and torture you. We will do the rest tomorrow. Okay? Alright, friends. Badri is done. Dimple is done. Are others also done? Friends, in fact, I told you yesterday, today, if you just go to my website again, tarunjagdish.com, yesterday, all the notes, whatever I'm writing, it is coming in a PPT format. I will share that with you. Okay, so today's notes and yesterday's notes both will come there. Just go to tarunjagdish.com/live and you can download it from there. By today evening, it will be ready over there. All right. Okay, friends, so we are done with this part also. Let's pack up today's session. I hope you have understood whatever was taken today. I will just share one other personality which has inspired me a lot. I'll take 5 minutes and then we can wind up today's session. Even before I start speaking about him, just one thing lets me just clarify. We were actually planning a 4-day session into 5 hours. Alright. So now we are done with almost international finance. Little bit is left, which we will cover maybe tomorrow. We have futures, it will get over tomorrow. Options should get over tomorrow, but one thing will be left out, that is interest rate derivatives. So is it okay if I take interest rate derivatives on Monday? The same time that we are following 7:30 to 9:30 and then 11 o'clock to 2. So with Monday, I will be taking one more day, but by Monday, we will be fully done with all the crucial topics along with the logic. And you will get a Sunday cool off time also in middle, so that you can relax, revise whatever is taken and brush up, and you can start back on Monday morning with a fresh mind. Is that okay with all of you? Yeah? Okay, alright. So friends, now let's speak about Michael Phelps. Who is Michael Phelps? He is one of the best swimmers that the world has ever seen. This person has taught me one amazing technique which has actually worked a lot for me, and it's still working for me, which I call it as the visualization technique. Michael Phelps as a kid had a lot of problems. His parents were divorced. He was not emotionally very much stable because of that. And whenever he used to get these fits of anger, the only way in which he used to take it out was by going to the water and swimming, because it consumes maximum energy. He will swim maximum and root his anger in a way that by the time he's coming out, he's exhausted and his anger is out. One day, his school teacher saw him swimming, and the moment the teacher saw him swimming, she understood that he is someone who is going to take it very big as far as the swimming profession is concerned. So this teacher called his mother, who was with Michael Phelps, and told her about the skills that Michael Phelps is having, and because of which they started keeping a professional trainer for Michael Phelps. This trainer, when he observed Michael Phelps, he understood that he has the perfect body for a good swimmer. At the same time, he is meant to be a swimmer if he can control his mind. Now, to control his mind, his trainer came up with a nice technique. Every day, night before sleeping, he was given a sponge ball. You know what's a sponge ball? Which releases stress. And he was asked to close his eyes, and he was asked to play the movie, play the movie, play the movie. This is what the coach kept on repeating. And with playing the movie, what the coach meant was a visualization technique in which Michael Phelps would visualize that he's walking towards the swimming pool and he's standing with all the opponents. A huge crowd is watching him and clapping for him. He goes inside the water, he goes straight, he touches the point, takes a U-turn, comes back. Once he comes up and he opens his eyes, he will see that he has actually broken the world record. Now, this is how Michael Phelps started training from the age of 12. And finally, when he reached the Olympics, he gave an open challenge to everybody that coming Olympics, he will win 8 gold medals. Friends, 8 gold medals is something huge. India, a country as a whole, has never done that. This guy has challenged alone that he will do it. And within announcement of this, after a span of 1 month of intensive training, he actually fractured his right hand. Doctors told him, forget about the next Olympics, recover your hand, otherwise if it gets permanently damaged, you will never be able to do. Michael Phelps was depressed, but every day night seeing the same movie again and again was not giving him sleep. So finally he decided, he went and told to the doctor, I am going to take a risk. I will go and swim by tying my hands. I will swim with my legs. That 1 year he swam so well with the legs that he was able to actually make his legs so strong that no one could actually beat him as far as the leg swimming was concerned. Afterwards, when his hands recovered, he started doing a proper swimming with his hand also, and he became very, very strong in his hands. And friends, finally that Olympic time came, and that was the time when he was about to go and swim. He started getting gold medals 1, 2, 3, 4, 5, 6, 7. Now comes the last one, the 8th one, which he wanted to achieve so that he could keep up his promise of getting the 8 gold medals. That is when he came to the swimming arena and he jumped inside the water. But at that time, one small problem happened. His goggles were not placed properly, because of which water went inside his eyes. And the moment water goes inside your eyes, you have no choice but to close your eyes. A split of a second, he got panicked what to do without seeing how will he even swim. But he said the next split second, the movie that he has been seeing in his mind started playing automatically. He started visualizing that he's swimming forward, and by keeping his eyes closed, he started swimming straight forward without looking. Because of the experience and the visualization technique, he could correctly measure the point at which he reached the point. He took a U-turn and he started swimming back. Now he could hear everyone clapping over there, but he doesn't know. He thought somebody else is winning. He got more panicked. He tried doing harder. And finally, friends, when he touched the finishing line, he closed up and he opened his goggles. He realized that he has broken his own world record, and he also got the 8th gold medal. A person whom we should respect for the kind of life that he has lived. One of the biggest lessons what I learned from Michael Phelps is that if you really want to achieve something, first and the most important thing that you have to do is you have to visualize. Unless you can believe in yourself, that I told you yesterday, and unless you can see yourself as a chartered accountant, you will never be able to achieve that. So friends, my request to all of you is, from today onwards, before sleeping, please visualize every day. Visualize that you are working very hard for the exam. Visualize that even though difficulties come, you are tougher than all the difficulties. Visualize that you are studying smoothly and the exams are coming. Visualize that the paper is tough, but you are tougher than the paper. Visualize that you finally write the exam, you relax and celebrate good time with your family and friends, and finally when the results come, you see those 2 wonderful words, yes. You visualize that you have become a CA. Visualize that you have done it and you are living your life king size. So this is my message to all of you today, friends. Please visualize and get successful. Thank you so much. See you tomorrow morning at 7:30. Have a nice time ahead. Thanks a lot, friends.